Welcome to the fourth question. In this session, I am going to discuss fourth question for manufacturing account under the transfer pricing. Right. Fourth question. I have recorded all the given information I have recorded, and they wanted us to prepare the manufacturing account and income statement. Right. So, directly we can move on to the uh, question. M Limited manufactures a single product. The following balances have been extracted from the ledgers for the year ended 31st of December 2023. Right. So, raw materials 10,400. Okay, have taken, and 12,600 is the work in progress opening balance. 12,600, and finished goods 14,904, that is also taken, and purchase of raw materials 146,200, that is taken, and carriage inwards 3,160, that is taken. Carriage outwards 2,790 taken, and direct wages 249,400 taken, and indirect wages 54,650 taken, and rent 49,000, rent 49,000, rent 49,000 taken, and heat, light and power 28,600 taken, and office salaries, general expenses 12,600, that is also taken. Office salaries 24,780, that is also taken. Right. And revenue 242,490 taken, and provision for unrealized for 2,484, that is also taken. And plant and machinery depreciation, plant and cost 200,000, it is taken. 15,000 office equipment, and motor vehicle 25,000 taken. And thereafter they have given provision 60,000, 4,600, and 5,740 we have taken. And closing inventories, number 1, this is additional information. Inventories as at 31st December 2023. Raw materials cost 11,750 taken, and work in progress 14,670 taken, and 15,750 finished goods taken. Okay. Up to number 1 we have done, and for the balance sheet it should go right at the closing balance. Right. They have asked now. Expenses are to be apportioned to the production department as follows. Expenses are to be apportioned. Right? You have to say factory, right, and office, right, rent. Right. Here we can say here is a net operating profit, net operating thin inch profit. Right. So we can close this one. So we can do the workings here. Okay. So we can do the workings. Right. So here factory and office. Right. Here they say rent. Rent. This is a cost. Cost. Right. So cost. Right. Here they say rent. Rent. How much? Expenses has to be apportioned to the production department as for production department three four fourth fifth rent fourth fifth and this is one fifth right, this is one fifth. Okay, cost is should be apportioned here, right? Rent, heat, light and power. Heat, light, and power. Right, how much, how the apportion? 3/4, fourth, fifth, fourth, fifth. Okay, then cost. Next one is what is general expenses. General expense, that is how 3/4, in the sense 1/4. This is 1/5. Right, given information we can make the chart, okay, based on this. Right. Okay, third one, rent has been prepaid. We have to take the rent from here. That's the rent 49,000, right? 49, rent is rent, right? That is 49,000, right? 49,000, right? They says rent 49,000, heating lighting 28,600. That is 28,600. Okay, and general expenses 12,600. 12,600. Okay, 12,600. That's all. Then what they say is what they say is um, rent has been prepaid at 31st December 4,000. Prepaid amount rent has to be deducted because this is not relevant to this year. And this prepaid amount has to be deducted from this here, from the rent account, right? So we have removed 4,000 and we had to show under the current assets in the balance sheet. And heat, light and power is in arrears by 3,500. Heating and power is arrears 3,500. Then we had to add 3,500 because we had to pay 3,500. So it is an accrued expenses. We had to show in the balance sheet another current liabilities. 3,500. Completed goods are transferred at a markup price on the factory cost of 20%. Markup is production to trading, right? Markup is transfer goods transferred at 20% margin. Okay, 20% margin. Okay, depreciation is to be provided as follows. Depreciation is to be provided, that will I will come later. And here all the informations are we have received, right? Here if we deduct the 45 49 from 4,000, 45,000 is the cost. If 45,000 is 5, right? If the 45,000 is divided by 5, 9,000. 9,000 is the charge for the office. Then 36,000 charge for the right. Here 28,600 plus 3,500. 28,600 plus 3,500. 3,500. That has to be divided by 5. 31,200. This is 31,200. Right? 31,200. Right? Has 31,100. Right? 31,100 divided by 5. 6,420 for one. 6,420 into 4 is 25,000. 25,680. 680. Right? 12,600. 12,600 divided by 4. 3,150. 3,150 into 3. 9,450. 9,450. Right? Now we can do the posting, right? We can do the posting. Here rent, how much? Here office 9,000. Office 9,000 and factory 36,000 rent. 36,000. Right? Heating and lighting. Heating, lighting and everything 25,680. Right? And general expenses expense is 9,450. 9,450. Right? Here rent 9,000. Here 6,420 is the heating and lighting. 3,420 and 3,150 is the general expenses. Right? So this adjustment is finished. Second and third and fourth. Okay. Fifth, they says 20% is the unrealized profit. 20% is the markup. Now they says depreciation 10%. Plant and machinery is 10%. Right? on cost, we have calculated on cost 200,000, then 20,000. 20,000 depreciation, plant and machinery goes to general expense, to the overhead expenses, right? Plant and machinery 20,000, right? On the 200,000 we had to apply 10%, that is 200 20,000, right? Office equipment, this is sorry, motor vehicle, this is 25 per annum. Motor vehicle 25 per annum on the net book value, right? Net book value 25% on the net book value motor vehicle, sorry, 25% on cost. 25% on cost means 25,000 into 25%, 6,250. Motor vehicle normally be used in selling and distribution. So selling and distribution, motor vehicle 6,250 depreciation. 6,250 depreciation. Office equipment, this is on the net book value 15%. This is 25% and 15%. Net book value 15%. Then we have, from the cost we have to deduct the accumulated provision, then multiply by the 15%. So we will get charge 1,660, right? 1,660, right? So charge for the year office equipment goes to administration expenses 1,660. Okay. So this net back book value will appear in the balance sheet, right? Accumulated profit, cost, accumulated profit, deduct the accumulated profit and show the net book value in the, this will goes to the balance sheet. Okay. So we have calculated the depreciation and we have made the double entries for the in the financial statements. Okay. And now this is 20% of the markup, and they have given brought forward balances 2,484, right? What is the opening stock? Opening stock of finished goods, right? That is equal to opening stock of finished goods, that is 14,904, right? Closing stocks of finished goods, that is how much? 15, sorry, 15,750, 15,750, right? So they says here 20% margin, 20% margin, 20% margin, right? So 14, this is 14,450 is 120%, right? This is also 120%. Then margin should be 14,904 divided by 120 into 20, right? Like that. Here margin should be 15,750 divided by 120 into 20, right? Then what is the amount, right? That is 14,904 divided by 120 into 20. That is equal to 2,484. Right? Here 15,750 divided by 120 into 20. 2,625. Here you can see, right? This opening balance is balancing with the opening balance. This amount is, we have worked out the margin and brought forward balance, unrealized profit, and this is balancing with the opening balance. Then this is the closing balance. Closing balance carried down, right? 2,625, 2,625, 2,625 minus 2,484. That is 141 should goes to profit and loss. Profit and loss account should be debited. Then from the revenue, right? From the revenue, we have to deduct how much the revenue? 742,000. Revenue is 742,000 and 490. 490. Okay. From that we have to deduct unrealized profits. Unrealized profits. Right, 141. Right. That means 742, 490. 742, 349. Right. Okay. That is the thing. Then we add the sums, right? 10,400 plus 146,200 plus 3,160. 159,760. If you deduct that from that, 11,750, 148,000, 48,010, right? If you add this direct wages, 249,400 and 397,410, right? The general, this is the prime cost. This is the prime cost, right? With that, saying that we had to go 54,650 plus 20,000 plus 36,000 plus 25,680 plus 9,450. Then we will arrive at 145,780. Right? We had to add this with the 397,400 410, right? 543,190. From that we had to add with that 12,600 we had to add. Then 555,790, right? From that we have to deduct the closing material. We deduct 14.67, 541,920, right? Margin is 20% into 0.20. That means 108,224, right? Plus 541, 120. Then goods transferred 649,344. Here revenue, cost of sales, purchases, oh, not purchases, goods transfer. Goods goods transfer uh, from production, right? Production, how much? 649,344. If we add this one, 664,248, right? From that 15,000, and so sure, six from 64,248 we have to deduct 15,750. Then it will come around 648,498, right? Is the cost of sales. Then gross profit will be, right, gross profit will be 742,349 minus 648,498. Then 93,851 is the gross profit. 93,000 90 93,851, right? Here from this we had to deduct, right, okay, gross profit is that 93,851, right? Then we have to add the expenses here, right? Okay, 9,000 plus 6,420 plus 3,150 plus 24,780 plus 1660, then 45,000 and 10, right? Then 2,790 plus 6,250, 6,200. Then it will come around 9,040. Total cost 45,000, 54,000, 50,000, 54,000 and 50. This has to be deducted, right? This has to be deducted from 93,851. 93,850. Then 39,801 is the profit, right? Net operating profit is 39,800. 39,800. Have you understood this one, right? This is the right. If you put like this lining, then you can understand, right? This is the cost of calculation of what you call rent, heating, lighting, right? And general expenses. Cost is this. This is the cost amount, and this is the factory value. This is the office value, right? Then it will be easy for you to identify it, right? So here working for depreciation, this is the working for depreciation, this is the working for the apportionment of the cost of apportioning this cost for rent, heating and insurance are the expenses. So apportioning to the income statement and manufacturing account, these are the common expenses which has to be apportioned, right? So unrealized profit, how we did calculation for unrealized profit, right? That is for the opening unrealized profit, we have how we have got and how we have tallied that one. This is the opening one, this is the closing one. Closing also we have calculated. Okay, so I think we have arrived at prime cost here, and after that we have arrived at the cost of goods completed, and we have calculated the margin on that, and goods transferred to trading account, this also we have calculated, and we have arrived at the gross profit, and we arrive at the net operating profit. Okay, so I hope, right, right, so I hope that today's lesson you would have understood the today's lesson, and if you have any clarification or doubts, you can clarify that with me. Okay, thank you. We will meet you on next lesson.